And David, I know you like the banks. Let's start with those new Fed capital rules. Does it change anything for you in terms of the performance and earnings, especially at JP Morgan, who has the biggest hole to fill?
Yeah, it's certainly a negative on the margin. I think these banks can, now that they know the rules, they can start to, actually manage their risk-weighted assets to, start to address these benchmarks and, get to a point where they can return more capital. But yeah, incrementally, hurting your ROE by about 100 basis points, it's not a positive, but there are a lot of other factors out there that outweigh it for us.
Do they know the rules? I think that's the big question when it comes to the big banks. Even if you think the economy is looking better and you think higher interest rates are coming, which should benefit the big banks, you're still seeing, $3.5 billion in new legal expenses and settlements. It's almost like we're desensitized to the headlines, but it's a big hit.
Yeah, well, I think when I said they know the rules now, I think that's really on the capital side. If you look back 3 years ago, they had no clue what was happening, and they just simply couldn't take any actions. But now I think they have a clear enough picture that they can start, managing, their balance sheets in a way that will, optimize the new rules. But yeah, on the legal side, it's very frustrating. These things keep, coming when you hope that they're cleaned up. You get another charge, and that can be, a little frustrating. But we do think we're in the 8th inning. LIBOR is going to be the last one, I believe, and hopefully after that, you get into some smaller numbers that don't matter as much in 2015. But I do like the fact that Citi's cleaning it up here in 14 and setting up a better 15.